Hello traders, Gary Wagner here just before 12 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, September 25th, 2019, and this is the Daily Report for Gold and Silver. What a day we have seen with severe, or strong, I should say, sell-offs across the board in the precious metals, and an extremely solid move to the upside in the dollar, which was part of the reason we saw such a sell-off in gold and silver. The model that we have been using was looking at that current rally that I believe ended yesterday as a short B wave. And if we're correct, we're going into our final down wave, that C wave. And what's exciting about that is once we have confirmation, technical confirmation, that that has concluded, we will enter the final fifth wave, and that should be about a $200 rally. We'll talk about that in detail as we pull up our charts, but first, let's take a look at today's pricing. Traders, we definitely had a strong sell-off in the precious metals markets today. We're currently looking at gold futures, the continuous contract at 15.1040 down $1.90. Now, that does not account for the almost $30 decline that came in the morning session. This is a continuation of that. Of course, we were long gold from 1505. If you recall, over the last couple of days, we have been moving our stops higher, and I'll speak about that in detail when we pull up our technical studies, but I am quite pleased that we did. We pulled a nice profit. Silver also trading lower on the day. Now, the current print is down about 10 cents, back through $18, $17.97, but in the morning session, it lost a total of about 70 cents. Now, when you look at the 70 cents, 13 cents of that was due to dollar strength, and 57 cents of that was due to traders selling the market lower. In the case of gold's decline of about $29, you had $10.60 directly due to dollar strength, and $17 plus as the remainder due to sellers in the market. And here's the primary reason. The dollar has just been extremely strong, had a major break above the range, is well above 98 again at 98.65, up about 0.75%. Let's take a look at our current technical studies. What a day we have seen, a pretty brisk sell-off. Gold now at 15.1130. It's down $1 in the afternoon session, of course, down almost $30 trading in New York today. If you recall from the last couple of days, we have been looking at the basic activity that has occurred since the market hit these tops and I believe concluded this dynamic and well-defined long third wave. We went into a corrective wave, and I was predicting some sort of ABC as a likely outcome of that. In fact, what we are looking at, I believe, is the beginning of the C wave. Now, I do have the Get Elliott wave up, but I use my own models, and even though that was looking at the conclusion of this fourth wave being here, in other words, what this model was predicting is that was our A, our B, and our C. If you recall from some of my earlier sketches, what I was looking at and considering was that it would be a lot more pronounced than that. And I felt that what we were looking at was a wave here, a B wave up, and then, as I said, a final C wave down. If it hit this area, it would be what was called a double bottom, and it could go as low as, I think, just under 1,500, but there is the possibility that it is a 0.38% retracement, and that would take it to 1,453. I thought that we were certainly still within the ABC correction, and that is why over the last couple of days, what we have done is tighten the stops on each and every day to just below the low of that day. That's an extremely tight stop. When I do something like that, what that is indicating is, although I don't know if my numbers are going to pan out, because if you recall, I expected the B wave to go anywhere between 1539 and 1549. That would be right about here. And this right here is 43. And so I felt we went into what I'll call a sweet spot. In other words, the prediction that we were looking at according to our model, as we hit that over the last 2 days, it told me to raise the stops tight. Now the question is, where are we going to head to from here? And my sense is is that I really believe we will see what's called a flat or a double bottom, because I don't think we're going to see that severe of a sell-off, but we will know if in fact it trades lower and how it reacts at around $14.95 to $15.00. Traders, we took a nice profit today. We are currently flat. My recommendation is to maintain your neutral stance, pull your profits, do what you want with them, and we will look to re-enter, because here's what I'm excited about. Once we have technical confirmation that this wave has concluded, in other words, our ABC, we get our final C wave down, wherever that takes us to, then we go into a fifth wave up. Now, the fifth wave up is going to be roughly equal to wave one. Wave one had a rally of about $200. That means we could see this market go much, much higher after this correction concludes. This has been Gary Wagner, wishing you, as always, good trading. We had a great day today. We'll talk to you tomorrow for the next daily update and review. Bye-bye.